What up, everybody? It's your boy CG, back at you guys again with more crypto news. If you guys could do me a favor, before we get into the topic of today's video, hit that like button. It takes less than a second. It's the easiest way for you to show your support to the channel. On top of that, it puts me on the good side of the YouTube algorithms, so my video will show up in people's suggested videos far more often. Now, let's dive straight into today's bullish news. I've talked about this before in several videos. If you guys do watch my videos, then you'll know that this is something that I've discussed, and I feel like it's very important as far as the bullish momentum that's gonna build up as far as Bitcoin heading to new all-time highs. So, bullish, struggling miners done selling their Bitcoin, says analysts. So we have somebody that goes by the name of Demister. Not too sure how to say his name, but Mr. Demister has actually been analyzing flowcharts for the Bitcoin miners' addresses and says that according to his analysis, we are seeing a decrease in selling pressure from mining pools, and these are the smaller mining pools, not the larger ones. The larger ones, which have more how can I put this, have more of a capacity to stay afloat even during this Bitcoin halving, where they're not making as much money as they once were because of a cut in the amount of supply of Bitcoin being produced. We are talking mostly about the smaller miners who had to capitulate because of the fact that they are not going to be able to maintain being profitable. Some of them cut their losses beforehand. Some of them are starting to rub up against hard times. So they're reaching that point as well. So according to Mr. Demister and his analysis, they have very few little Bitcoin left to sell, which in my opinion would be the smart thing to do at this point, because you don't want the price to get worse, or you don't want to continue maintaining overhead that you're not able to afford because your profitability has essentially been cut in half, especially if BTC remains at these levels. So Mr. Demister actually posted a chart right here that analyzes what took place over the last couple of years. This is a miner outflow chart. So as you guys can see right here, this is when miners selling, these are the lows, and the spikes right here are the highs when miners selling was at an all-time high. And as you guys can see, I'm not like a veteran in the crypto market to where I was here in the 2012s to 2016. Like this area behind here, I've only heard about it and looked at it on charts, but this is my area of expertise right here and my experience right here, 2017 onward. And as you guys saw during the last run, right around 2016 when the last halving was, we saw a lot of some sharp sell-offs right here from the mining pools, and then we saw the dump, because according to this, that's when we saw a lot of the miners start to, well, the miners who still were able to continue mining Bitcoin and still maintain profitability, we saw them hold right here, and then leading into the next bull run. Because as you guys know, how, as I've stated in other videos, after the miners are gonna, well, after the smaller miners capitulate and they're unable to remain in the market because of their inability to maintain profit, we're going to start seeing more momentum come back into the price for Bitcoin as far as a bullish trajectory. As you guys also saw right here, when BTC started getting bullish again, we did start to see more sell-offs, but at this time, the momentum that was picked up was far outweighing the amount of miners that were actually selling their Bitcoin into this new bull cycle. And we actually had our peak right here going into 2018. And then we had the sharp sell-off because, as you guys know, the price collapsed from all the way from 20K down to around, I believe, like 3.7K was the low in 2018. Was that 3.7K in 2018 or was that 2019? I think it was 2018. We hit that 3.7K low. But now that we've started another bull cycle after this 2020 halving, where we are going to see these miners sell off, and while it may not look as noticeable on this chart, I guarantee you, give it a couple more years and we see the same chart and we look back on it, we're going to see the exact amount of volume that was sold into this halving or post halving. So yeah, this is actually really good news for anybody who's paying attention to these metrics. Guys, keep on the lookout for more things that may happen that may actually prove to be extremely bullish for Bitcoin and the cryptocurrency market as a whole. Last article, balls in their court, crypto custodians waiting on the regulators to act. So this article is more so along the lines of, we have so many crypto custody solutions that are available to the average crypto investor or institutional grade crypto investors nowadays, that we really do need to see some type of regulation come into play that not just plays towards the individual districts or individual jurisdictions, but on a global level, because as you guys know, cryptocurrency is a global, sorry, I have to fix my mic, is a global market. So this goes into this article actually explains how traditional regulations are being applied to these crypto custody companies. Now, these digital, I said these digital regulations, I was about to say these digital regulations, but these regulations do not account for the new sophistication that comes with cryptocurrency assets, such as the transparency level. Whereas in older custody solutions with more traditional assets, you weren't able to tell what was going on with your money or your assets once the company was holding it for you. That's why they had such a thing as audits. If you guys aren't familiar with audits, then go look it up. Audits is when they come in, they make sure you have what you're supposed to have, that no funny business is going on, and so on and so forth with clients' money. Now that we have this digital cryptocurrency standard or this new technology, everything is a little bit different, because now digital assets or cryptocurrencies come with a higher level of transparency. And as they say right here, it depends on the actual cryptocurrency provider or the crypto custody provider. But overall, cryptocurrencies are far more transparent than traditional assets. Now, the one thing that I feel that needs to take place, as I said earlier, there needs to be some type of global understanding of how we're going to treat digital currencies or cryptocurrencies across all fields, whether it's custody, taxes, whatever it may be, how to treat them depending on the asset class wise, how to label them, because at this point in time we have so many individual states, countries, jurisdictions doing their own thing, that when somebody wants to cross over from one jurisdiction to another, it actually can be an opening. It actually can lead to them opening a can of worms, because what happens or what is allowed in one jurisdiction may be completely different in another jurisdiction, and you may open up red flags just by operating out of that jurisdiction that you were previously operating in, which is why I was saying on this article, as well as stating that we really need to have some type of global standard for how we go about these things. So they actually put up a really good example. For example, cryptocurrency exchange Liquid. Cryptocurrency exchange Liquid had changed their custody solutions provider. And because of this change in their custody solutions provider, they were coming off of cold storage while still maintaining the integrity of their platform as far as security goes. But they had a lot of Japanese clients on Liquid. And because of that, the Japanese jurisdiction requires that Liquid maintain their funds in cold storage, which Liquid was trying to move away from. Now you see the type of problems this can create, especially once you're transferring to a custody provider that doesn't necessarily deal with cold storage. So it's really touch and go. It's a really delicate situation that's going on right now, as far as making sure you're not stepping on any toes and tiptoeing around the gray areas. But this is why we really need to see some type of global understanding of how we're going to do things and moving forward, because like I said earlier, this is global. Cryptocurrency is amazing in and of the fact that it is literally a 24-hour global stock and or financial market. The money does not stop moving. There is no time. There is no body to tell you what you can and can't do, to a certain degree, depending on who you're going through or your provider or the app or company you're using. And this is just something that we've never experienced before. So I feel like we really need to see some more regulation. And I know that sounds crazy coming from a person who's into crypto, because of the idea of the fact that it's not regulated. But I mean, as far as regular average everyday people who aren't really into the whole deregulation idea and are more comfortable with how things are traditionally, they would like to know that they are in good hands and they're safe, and that their money is going to go up in flames because a company wasn't following the rules, because the rules are not spelled out clearly. Anyway, everybody, this has been your boy CG. Have a great night. Peace. I'm out. I'll be back with more news soon.